So it would seem that the stock market people out there who know all sort of about that stuff are actually betting that the Activision Blizzard deal will probably go through. Let's talk about why right now. Thank you so much for watching, everybody. Please hit that subscribe button, hit that bell to know when this content goes live. I really do appreciate you watching. So this comes from Seeking Alpha, and it is an analysis of what is going on with the Activision Blizzard merger. Basically, it's saying that the market is betting that the Activision Blizzard acquisition will go through. And they talk about a few of the key points about why. So basically, Berkshire Hathaway has built up its holdings in Activision since the proposed acquisition was announced. Berkshire owned $4.47 billion in Activision shares as of September 30th, according to the most recent Form 13F. Now, the reason a company like Berkshire Hathaway would invest in that is because they think it is mostly a safe bet that this deal was going through. And also the author discusses why he said what he said back in May about how he feels about the merger. I wrote about Activision on May 30th, 2022, about 6.5 months ago, at which time I upgraded the stock from a hold to a buy. At that time, the shares were trading at $78.20 as compared to $76.08 today. So it's down a little bit. Since this post, Activision has reported one quarterly earnings miss, Q2, and one earnings beat, Q3. My upgrade on Activision was primarily due to the pending acquisition by Microsoft for $95 per share. So basically, it sounds like the stock is going to be traded around $95 a share once the deal completes, but it's valued at $76.08 today. People stand to make a significant profit if you're able to sell it at that $95 mark. The Wall Street consensus clearly favored the deal going through with a consensus 12-month price target of $95.56. The highest and lowest analyst price targets were $95 and $100, an incredibly tight range. So they think it's going to be a sell right around that price mark, right? That market implied outlook indicated that the buyers and sellers of options were, in aggregate, assigning a substantially higher probability to the deal closing than the alternative. They're betting billions of dollars that this deal is going to go through. The price of an option on a stock is largely determined by the market's consensus estimate and the probability that the stock price will rise above a call option or fall below a put option by specific level, the option strike price between now and when the option expires. With more than 6 months since my last analysis and the recently announced FTC suit, I wanted to revisit my rating. I have calculated updated market-implied outlooks for Activision and compared these with the Wall Street consensus as in my previous post. And spoilers, they think that the deal is going to go through still to this day. But they talk a little bit about Wall Street, etc. Now, if you don't trade stocks, this might be a little bit confusing to you. Basically, there's a lot of different things that you can do. You can bet against a deal going through. So you could buy it, and then I believe it's called shorting. And then you could buy stock and assume that it's going to increase in value to that $95 point. So he's trying to outline why he thinks that this deal is going to go through. The range of the analyst price targets is considerably wider than it was in my previous post, but is low compared to most stocks that I've analyzed. The increased spread reflects a reduced level of confidence that the deal will close. So the spread has increased a little bit, but not that much. He's just indicating that there's a little bit of wariness because, you know, the FTC is suing Microsoft and everything, but for the most part, this analyst feels like it's still a pretty good bet to buy. Seeking Alpha's version of the Wall Street consensus outlook for Activision is based on price targets and ratings from 24 analysts who have published opinions in the past 90 days. The consensus rating is a buy, and the consensus 12-month price target is $92.04, 21.1% above the current share price. Imagine in a year, you could have a near guaranteed 21% profit. That's what he's saying. He's saying you should buy this. It feels like it is a good bet to buy this. That's at least the way that I'm reading this article. Maybe somebody who knows more about stocks could talk about it, but yeah. No, I do not have stock in Activision Blizzard, if you're wondering. But kind of wish I could. I can't, but yeah. Anyway, the prevailing view from Wall Street is a buy with a 12-month price target that is very close to Microsoft's acquisition price. Okay. So people are saying buy, and the target is very close to that acquisition price. The market implied outlook to the middle of 2023 is qualitatively similar to the result I calculated in May. So even if this doesn't go through until 2023, he still predicts the same outcome, that this deal is going to go through, that we're going to see that 21% profit for investors. And that's why most people like Berkshire Hathaway mentioned at the beginning of the article are heavily invested with something like $4 billion in this deal. I've seen a lot of things pop up online where like they're saying the industry is betting against this. Everything in this article says otherwise for the most part. They're basically saying that it seems like that this deal is going to go through, all things considered, and the market believes that it will go through. This outlook indicates that the consensus view from the options market strongly favors the acquisition being closed at $95 per share at some point in the next year. They even go a step further and they say this will close before the end of 2023. So they're quite confident that this is going to close in the next 12 months, and they're quite confident about that $95 price target. The market implied outlooks are titled to favor Activision being purchased by Microsoft within the next 13 months, and that shares are likely to rise substantially in the next 6 months. The expected volatility is quite moderate, suggesting that Activision will not drop too precipitously even if the deal fails. So even if this all falls apart and he's wrong, the market is saying, hey, you're probably not going to lose too much money. So largely, that's why Berkshire Hathaway has billions of dollars tied up in this thing, because they believe that it's going to go through. Now, if you haven't been following this whole case thing, I did a video yesterday where the UK branch actually reached out to a bunch of people and they got their responses. So be sure to check that out. But first, hit that subscribe button, hit that bell to know when this content goes live. Thank you so much for watching. Thank you so much to all of the members for supporting. If you want to become a member, you can become a member by clicking that join button right down there. And that video I mentioned, you can check it out right here or hit that subscribe button. I'm going to get out of here and I'll see you for the next one. Bye for now, everybody.